Hey there, Tamir from Fibonaccis-Traders.com here. In today's video I want to talk about secrets of technical analysis. Thank you very much for joining. Please hit the like and subscribe buttons and let's get started. Few starting points. Technical analysis is not the same as price action analysis. Technical analysis is the use of indicators to generate buy or sell signals such as moving averages, RSI, MACDs, and many other thousands and thousands of indicators out there. Price action analysis is to try identify price's next move without any use of any lagging indicators. Now, when I say lagging indicators, yes, all indicators out there are lagging. And why is that? Because in their formula there is price. So until price does not get its own value, final value on any time frame, if it's the monthly, weekly, 1 minute time frame, until the price does not get its value, none of the other indicators will get the final value. Therefore, all indicators by default are lagging. Most beginner traders try to find the holy grail. There is no such thing. There is no holy grail. So stop looking for that. Technical analysis attracts traders for a simple reason, but there are some problems with it. Meaning of indicators: you take the price, you make some kind of formula, and you get a lagging indicator. Any math formula applied on price will give some kind of indicator. It's the meaningless processing of price. Most indicators makes no sense. Traders needs to choose a specific time frame for a specific indicator. Why would you choose the 20 MA instead of the 19 MA? Or RSI 14 instead of RSI 21? Why using MACD instead of stochastics? Doesn't make sense. Indicator that works on the daily time frame probably will not work on any other time frame, such as, for example, if you take the 8 EMA, it might work on the 15-minute time frame or on the hourly time frame, but what about the monthly? So it doesn't make sense. So how do you know which indicators work on which time frame? You don't. You can't, due to the nature of price. Otherwise, indicators would have worked like magic. Indicators eliminates the small nuances in price. These small nuances is the meaningful information that allows us to analyze price action properly. So let's talk about the solution part. We have a problem. We need to find a solution. If we take the SPY daily, we see here all the EMAs, we have the RSI, we have the MACD. Which one should I follow? On the daily for the SPY. On the weekly, we can see that on the weekly, the SPY reacts, the price of the SPY reacts different than on the daily. And if we take Microsoft, we can see that on the daily, Microsoft reacts to different moving average than the monthly. So which moving average works with which name and on which time frame? We can never know. Even if we sit weeks and months, we will never find out because all indicators are lagging. So what do? We just eliminate all indicators, we clean the chart, and now we have simply price action. Candlestick is pure price action because candlesticks are buyers versus sellers. This is what gives us the final price every day, every minute, every month. So we can identify lows and highs with trend lines. Because if we take this trend line here from this point to this point, we can see that this trend line here is a resistance for price. It came here, broke above, and went back down, and we see that this trend line holding as a resistance. So we can identify and assume that the next time price of Microsoft on the daily will go up, this trend line will act as a major resistance. Now we draw this line on the daily time frame. We can take it also to the weekly. Still holds. On the monthly, still holds. On the 15-minute, hold. We can go back, further back. So if I know the trend lines gives me support and resistance, they will give me support and resistance also to the future. We can take also two, this here and this here. And as we can see, price touched resistance, resistance. But there are many, because every 2 points can give me a trend line. So which trend line should I choose? This is why it depends on the time frame that we are trading. If we want to trade, swing trade on the daily, we need to go to the weekly or the monthly, draw our lower highs, and draw our lower lows, like this one here. And if we take it further back, we can see that this trend line started somewhere over here as lower highs on these candles here. Now it became support, support. So now I know this is a downtrend channel on the Microsoft weekly, but it's not only on the weekly, it's also on the daily. As you can see, to the point, to the point, to the point, and bounce. So trend lines are the real support and resistance for price, because it came from the past and it goes to the future. So Apple or Tesla, if we take Tesla on the monthly, we can see Tesla have trend line that starts from here to here, and then also have trend line from here to here. This one here, resistance to the point, and back down. Now these trend lines are on the monthly. They will also be on the daily. We can see, look how many times on the daily tried to break up and above, tried, failed. Now on the daily we have lower highs and we have lower lows from this one to this one, and this one goes all the way back to here. We have lower lows on these candles here, low, low, just a little bit. Again, it doesn't have to be exactly to the penny when we draw it, because we are not machines, we are human beings. It just needs to give us a support and resistance area, and if we can see price is holding almost to the penny, went all the way back, and now Tesla probably will retest this trend line here at the 160 area, and then it might gives us a bounce back up. So I hope you find this video helpful. Please hit the like and subscribe button. Let me know in the comments below what do you think about this video. Thank you very much for watching, and I'll see you in the next video.